Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of a roundup of international economic consequences from the pandemic. First, American mortgage applications don't seem to be falling away any faster than the latest data for last week, but they're down 31% from the same week a year ago. And staying in the US, severe disruptions in supply chains is crimping meat supplies, and prices are rising fast. In Japan, Toyota said it was halving car production in May. There's another signal that the economic effects of the virus are continuing to bite hard worldwide. And China's steel mills are making more product that they can sell, and yet iron ore prices are rising again. It's a situation that will break one way or the other quite soon. And the latest survey of EU consumer sentiment came in lower than expected and very much lower than for March, taking them down to 2009 levels. And ECB boss Christine Lagarde dispelled notions of them buying bonds directly from EU member country governments or doing some sort of helicopter money drop. They will stay only as an actor in secondary financial markets. And Turkey has chopped its official interest rates again, the 8th time in a row, and down 1% to 8.75% as their economy tanks. This rate was 24% at the start of 2019. In Australia, there's increasing talk of a federal government bailing out struggling companies by buying equity shares in them, in effect nationalising them. Virgin Airlines might be one of the first. Then again, it might not be. The question of whether Australia can afford two airlines is currently front and centre in discussions there. And the US Treasury 10-year yield has recovered 6 basis points to be now just on 0.63% and pulling back from its spike lower yesterday. Gold is much higher today, up $37 to $1,715 an ounce. And oil prices have risen today, but are still very low, especially US crude prices. They're currently at just on $14 a barrel, and that's a $5 jump since this time yesterday. But that's still in the extreme pain zone for producers, however. International oil prices are rising too, with the Brent benchmark up $2 to $20 a barrel. Just 1 week ago, this price was at $28 a barrel, and that was considered unusually low. And the Kiwi dollar will start today weaker again. We're now at 59.3 US cents, another quarter cent lower than this time yesterday. On the cross rates, we're 0.75 cent lower at 94.1 Australian cents. And against the euro, we're little changed at just on 55 euro cents. That means our trade-weighted index has slipped back to 65.8 and now well below its rolling 4-week average. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.